So I'll just go through as quickly as I can, but lots to cover. I'll give an update on Bitcoin and cryptocurrencies in general, and then a little bit of a deep dive into NFTs. How many of you guys, raise your hand, have familiar with NFTs a little bit? Heard of them? Okay, we'll talk about them. Pretty interesting. So coming up in Miami on June 4th and 5th is the largest, as it's being billed, the largest Bitcoin event in history. So you could get your tickets, Bitcoin 2021. Evidently, there's going to be about 15,000 people there. Miami is billing itself as the development hub for the future of cryptocurrencies. So they're trying to steal the thunder from, other Silicon Valleys around the world. The mayor of Miami is a big proponent of cryptocurrencies and Bitcoin, is actually trying to get the city council to put Bitcoin in their treasury, which is kind of a pretty amazing thing. Many of you are familiar with Bitcoin. Those that have noticed that Bitcoin is going down. Of late, it's in a correction period, pretty dramatic correction. Bitcoin is pretty volatile. Some are saying that Elon Musk had a lot to do with this. He has been promoting his Dogecoin. And Dogecoin, as you can see by the graph here, has gone up, closed on May 7th at a 13,000% increase. And so Elon Musk has been a big proponent of Dogecoin and has been pumping it. Some are saying it's a pump and dump kind of a strategy, but nevertheless, his announcement that he was getting out of Bitcoin, or at least not allowing people to buy Teslas with Bitcoin, is what some are saying is what caused Bitcoin's price to go down. Others are saying that it had more to do with just a correction that was due. And if you would like to listen to a really good discussion or an explanation of this whole topic and the tension between Elon Musk and the Bitcoin maximalist community and Dogecoin, just hold your phone up to the screen and you can scan this QR code, and it'll take you to a very thoughtful conversation about this topic. So if this is something you'd like to learn a little bit more about, go ahead and scan. So another reason that some are saying that Bitcoin's price came down is in this correction period is that Binance, one of the major exchange platforms similar to CoinDesk and others, is currently being probed by the Justice Department and the Treasury. But these federal agencies haven't accused Binance of any wrongdoing, but it's sort of a first shot across the bow of a lot of these cryptocurrency exchanges that are anticipating the federal government to impose some sort of regulation. Nobody knows exactly what that regulation is going to look like, but it's on the horizon. And in my opinion, Bitcoin and others have this thought or this threat of regulation baked into the price, but we'll see where it goes. So that's big news. That also is what some people are saying, drop the price down. But at any rate, one of the things that is clear is that most of the people that have sold their Bitcoin are the short timers. It's the folks that are buying and holding the Bitcoin have held in to the market. They're not selling. And so it's the short-term holders are leading with the panic selling is what the market says. Right here, you're looking at a bunch of numbers, but this was Pantera is a investment company that tracks Bitcoin and other cryptocurrencies. And in April of 2020, they produced a investor letter that projected what the price of Bitcoin would be going forward for the next 2 years. And it's a stock to flow projection. And in March of this year, they correctly, March 15th, the price, or I'm sorry, at April 15th, they correctly projected the price at $62,000, which is pretty remarkable, seeing as it was a little over a year since they produced this investor letter. They projected the price right on the money. However, the price for May was way off. They projected 74,000. The price in May was 42,000, and that's quite a bit of a shift in price, obviously. However, if you look at the on January 1, the price of Bitcoin was 29,000, and that is a 31% increase to date for your investment, which is pretty remarkable in and of itself. But still, they're projecting that in August 1st, the price of Bitcoin will be $115,000. We'll see how that shapes up. But nevertheless, fund managers that were interviewed by it's a Bank of America Global Fund Manager survey. So there was 450 some odd mutual fund and fund managers are still saying that they are long Bitcoin. That is the most crowded trade in the world right now, which is kind of interesting. So they're long tech, long, or short treasuries, long infrastructure. It's the question as to what do you think is going to have the most fortuitous future? And they're saying that Bitcoin has is the best trade out there. So that's kind of interesting. And for those that want to understand a little bit more about the conversation between Bitcoin and gold, many are saying that Bitcoin is a newer, better version of gold. It's a digital gold, if you will, as a store of value. There was a very, I think, thoughtful and intelligent, these are two of the smartest people, Michael Saylor and Frank Giustra, arguing on both sides of the coin, if you will. And here's another QR code you can scan if you'd like to listen to that. It's a 2-hour discussion, but it is incredibly insightful about the future of currency and which is it going to be that's going to carry the day as far as the next reserve currency or not, and where we are going with regard to Bitcoin and gold. So go ahead and scan that QR code if you'd like to have access to watch that. It's really, really fascinating. So before I get into the NFTs, I just want to do a quick reminder of how the crypto ecosystem is set up. At the base layer is the internet, and above that is the blockchain, which is built on the internet. The blockchain, of course, is an encrypted distributed ledger. And rather than explain what that is, that's sort of a topic for another day. You've got the two largest cryptocurrencies, Bitcoin and Ethereum, are built as a part of the blockchain ledger. So they are different and I'll explain how they're different briefly, but they are different in terms of how the Ethereum development platform is created. So not to be confusing, Bitcoin and ETH, or Ethereum's cryptocurrency, are similar in that they are cryptocurrencies, but Ethereum was also developed to have a development platform separate from its cryptocurrency, of which the smart contracts, DeFi, and NFT tokens are built upon the Ethereum and others, but just for the purpose of simplicity, Ethereum is one of the most popular development platforms of which these NFTs are built upon. So that just kind of gives you a visual of how to think about the blockchain, Bitcoin, Ethereum's cryptocurrencies versus the Ethereum development platform, of which the NFT tokens and NFTs are built on. Alrighty. So just a quick explanation of the difference between Bitcoin and Ethereum. They are different. They're similar in terms of how they're built on the blockchain, but they're totally different in terms of what their purpose is. Bitcoin was created as an alternative to national currencies and thus aspires to be a medium of exchange and a store of value. And that's pretty much all it does. It's unique in that there's only 21 million potential Bitcoins to ever be mined, meaning it's limited like that. That's what gives it a lot of its attraction for investors. Ethereum, on the other hand, was intended as two things. One is a platform to facilitate contracts and applications, as well as to have its own currency. So those are kind of the differences between those two. Now, let's talk about NFTs. Non-fungible tokens and it's going to be a little bit confusing at first, so bear with me here. I'm going to try to break it down as simply as possible, but it'll be hopefully a little bit more illuminating by the time we get done here. NFTs are a unique digital token that securely stores information on the blockchain. So basically, if something is fungible, it's a terrible word, but that's what it's, non-fungible. Fungible is something that there are many and they're exactly the same. So something that is many and exactly the same, like a dollar bill, is something that is fungible. Something that is non-fungible is a one-of-a-kind item. So like the original of Michelangelo's Mona Lisa is worth around $850 million. So if it's non-fungible, it's a one-of-a-kind. And that's the whole idea with non-fungible. Now, token in the blockchain ecosystem, any asset that's digitally transferable between two people is called a token. So if you have the non-fungible aspect and the token aspect, that's where NFTs come in. It's a non-fungible token. So basically NFTs can represent any number of different asset types. So an NFT can represent a physical asset, a digital asset such as an image or a video clip, a physical asset such as real estate property, believe it or not, music, tickets to a show. They can also represent intangible assets such as processing power or data storage in a certain utility or space. So an NFT can represent just about anything. Now, what makes NFTs unique, built within the NFT itself, built within the token, is a smart contract. And in the smart contract is where this gets defined. So you can specify the property details and ownership within the smart contract that's built inside of the NFT. Think of it like sort of a nugget within that NFT. You can also specify, let's say you're a musician, you can specify how that NFT gets sold or resold. You can specify royalties owed. If it's a real estate property, you can specify, the boundary of the property and so forth. So that's all built within what's called the smart contract. So the one thing about NFTs, and an easy way to think about an NFT is to think about the deed on your house or the title on your house. So, or on your car, right? Your car has a title, and that title is a piece of paper. But NFTs are like that. They create that extra layer of trust, and trust creates scarcity, and therefore scarcity creates value. And that's why NFTs have value. So just to talk a little bit about some of what's happening within the NFT world, someone paid over $400 for an NFT for a 52-minute recording of farts. Right? So it can be just about anything. Here is an example of an NFT. This is a digital piece of art. It's kind of crazy. It's the first 5,000 days of the internet, created by an artist named Beeple. Beeple is very famous for his digital art. This particular piece called the first 5,000 days. So it's the first 5,000 days of the internet, sold for $69 million as an NFT. And this basically, this was sold at Christie's, and this put the whole concept of NFTs in the limelight. So this only happened a few months ago. So this is new. Here's another piece of digital art created by Larva Labs in 2005, promoted by CryptoPunks. This is an NFT that's being sold for between $7 and $9 million, and it's offered at Christie's. So yeah, I mean, are you kidding me? This crazy little piece of art, and it's a whole series of these, but because of who created them and what they represent, they're worth a lot, and they're being sold as an NFT. Some of you may have heard Jack Dorsey, who created Twitter. This is an image of his first tweet. And this image of his first tweet sold for $2,900,000, and it was donated to charity. So just imagine that, sold as an NFT. Charmin has gotten into the mix. They created an NFTP, right? Toilet paper, Charmin, NFTP. So they created one, and they're selling theirs at Rarible, which is one of the exchanges, and all proceeds are going to charity for this. But they didn't want to miss out on the opportunity to do a little play on their on words, obviously. For those of you that are familiar with an artist named Grimes, she recently sold $6 million worth of digital art as NFTs. She sold it in this way. 10 pieces went for sale on another exchange called Nifty Gateway on February 28th. She sold a one-of-a-kind video for $389,000, and then sold two additional pieces, made each piece 1,000. So think of it like a piece of art where you may have one of 1,000. She had two different pieces of art, and she was selling each one of those for $7,500. The total take was $5.18 million for those. So to think that NFTs are just sort of, passing fancy, I don't think so. And so what do the buyers get when an NFT, when you buy an NFT, what do you get, right? So what's the big whoop? Well, you get bragging rights that you own the piece, and you essentially get like a title to that piece. So that's one of the nice things about it. Think of when you buy a car. And you get a unique, secure, authenticated digital token living on the blockchain. So, that's something that's encrypted and transparent. Everybody can see it. And you obviously own a speculative asset that you can resell. So what does the artist get? What did Grimes get? Well, Grimes gets most of the sales revenue, cutting out the middleman. And this is huge for artists in particular. She has total control over this piece of art, or these pieces of art. Then built within that smart contract in the NFT, she's able to donate a percentage to nonprofits, as she did. And the royalty revenue from future sales, she can build into that NFT contract that every time that piece of art sells into the future, she gets a royalty for that. And she can also designate that the developers that helped her to create the video and the other pieces of art also get some sort of royalty for the future as well. So you can see how the artists now have a new level of control over their art that they create. Well, let's talk about some different things. Real estate can be built as an NFT or created as an NFT. The real estate market is huge, 228 trillion estimated. But what's interesting about real estate, it has high prices, expensive transaction costs, as many of us know. It takes a while to buy and sell a piece of real estate. You've got a 90-day escrow kind of a thing. And it's incredibly difficult for buyers that don't have the kind of resources to buy real estate. So it's actually a great industry to be tokenized by NFTs. Here's a company called Realty that's actually doing just this. And Realty, you can go to realty.co, and actually here's a QR code that you can scan to watch this video that will give you a quick update or a quick explainer video on how they work this fractional tokenized ownership of real estate properties. And you can actually buy a fractional piece of real estate. They've got a property right now for sale in Chicago. They're adding them worldwide. And what it does is it allows for a lower bar of entry into real estate, similar to a REIT from that standpoint. But the difference is you've actually got your name essentially on the title. So it's different than a REIT or an investment in real estate, like a REIT, like a real estate, a fund, if you will, of real estate properties. In this case, you actually own part of the property. So scan this QR code if you'd like to listen to that video and learn more. And actually, they use a token called DAI, which is another form of cryptocurrency. That's the cryptocurrency that you will use to buy into this fractional ownership. You actually earn rents, so you would actually get some of the rental income from this particular property that they're selling. And so it's fascinating. You can scan that QR code if you'd like to learn more. But one of the things that's really interesting about NFTs in this particular case, and this is not limited to this one, but for example, NFTs allow for a less well-off person to own the same percentage of their net worth as a billionaire's percentage of net worth. for the same asset, currently not available to the less well-off person. So this idea with NFTs gives the idea of equanimity to investors and more opportunity for people of on all economic levels.
Say, Reese, we
Here
need
is
to, excuse me, Reese, we need to wrap up a little bit. Give Chuck plenty of time.
Sure, I'm almost done. This is it. If I could just add this one last thing. This is an NFT of a house that's for sale up in Santa Monica area. The NFT is for sale for $117,000. The owner is selling the NFT separately from their house. They're also selling their house as an NFT. And that is kind of an amazing thing if you think about it. There's one last thing I'll mention is Mark Cuban is big into NFTs, selling their Dallas Maverick tickets as an NFT, but also in such a way that he can take advantage of people that are buying these tickets and reselling these tickets. He will continue to get a royalty on them. So these are some of the NFT marketplaces, and I will wrap it up there.
Great, Reese. Thank you very, very much.
Mm-hmm.